Let's get a look at where we stand earnings season. We're about two-thirds of the way through this, and that has been the wind at the market's back. Fully 8 out of 10 companies reporting have handily beaten earnings estimates. A little more than half, close to two-thirds, have beaten on the revenue side. So top-line growth has been a big factor for this, too. And that has been one of the positive developments here. To market watcher Mark Matson on what he makes of this continuing. Could it continue? What do you think, Mark?
Well, I think investors always need to look long term. I mean, it's great when earnings come in high and consumers feel good right now. We have a lot of people going back to work from an economic standpoint. As a matter of fact, you can make the argument you have more jobs available than people that are actually willing to take them. So that's great. The tax cut helped consumers have more money to spend. That increases the economy. And that's all been great news. And I think that's probably why Donald Trump's numbers are so high for approval rating right now. But that doesn't mean you can necessarily predict the market. I mean, look back just not a couple weeks ago, the market was crashing. A lot of people were saying to get out. Markets are random and unpredictable in the short term.
Yeah, and I think for Larry Kudlow, and it might be a wise strategy just to say don't look to us for the markets turning south. Look to, in this case, this White House view that it's fear about Democrats taking over the House that's leading to this. What did you make of that?
Well, we actually did a study looking back, because a lot of people are afraid of that, especially conservatives, and I don't blame them. But we went back and looked over the last 60 years when the Republicans versus the Democrats had the House. And what we found was zero correlation. There's zero correlation about market performance when the Republicans versus the Democrats have the House. So for investors that are trying to make that analogy, don't make that analogy. The reality is the markets have been very volatile. It's been a roller coaster. And the number one rule for riding a roller coaster is don't jump out of the roller coaster. So, it's hard to keep long-term focus, but that's exactly what investors need to do right now, and buy the thing when it's low and not sell it when it's low.
What happens after a rocky October? In most cases, I know famously, most cases, the markets come back in November. Now, they were coming back in the final few days of trading, but it was still an awful month, no matter how you look at it, for virtually all the major averages. What do you see November looking like?
Well, if you look at statistics, the reason that if October is down, September's up, is because that's normally the rule. The vast majority of the time, 75% of the times roughly on a 12-month period, the market's up, not down. And when it's up in the range of about 20%. And when it's down, it's only down in the range of 13%. So, I mean, if you imagine if that was a game in Vegas, how many people would want to be playing that game? Win 3 out of every 4 times, you're up 20% versus negative 13. Vegas would go broke during that. So, don't try to predict just the next month. Investors need to be long-term focused on the next 10 or 15 or 20 years, because anyone that tells you they can predict the next month is either delusional or lying, either one.
All right, 10 or 15 or 20 years. I mean, I'm looking at lunch sometime next week. All right, so we gotta find a happy medium there. All right, thank you very, very much, Mark.